Have you ever wondered what makes a merger truly transformative? What if I told you that the $10 billion merger between Morgan Stanley and Dean Witter Discover was the deal that changed the financial industry forever? In this video, we're going behind the scenes of this historic merger. Imagine the intense negotiations and strategic maneuvers that led to a game-changing alliance. Stick around, because by the end, you'll discover how this merger reshaped Wall Street and what it means for the future of finance. Dean Witter Discover, a name synonymous with excellence in the financial sector, boasts a rich history that predates its groundbreaking merger with Morgan Stanley. Formed in 1979 through the union of Dean Witter and Company and Sears Roebuck and Company's Discover card, Dean Witter Discover swiftly positioned itself as a formidable force in finance. From its humble beginnings, Dean Witter Discover experienced rapid growth and success, driven by its innovative approach to retail brokerage and credit card services. This approach saw the launch of the Discover card, which revolutionized the credit industry by offering cash-back rewards, an unprecedented move at the time. The company's unwavering commitment to customer service and financial expertise distinguished it from competitors, earning it a loyal following of clients and investors. Throughout its history, Dean Witter Discover achieved numerous milestones and accolades in the financial sector. In 1986, the company introduced the nation's first no annual fee credit card with a cash-back bonus program. By late 1980s, it had amassed over 20 million cardholders and became one of the top credit card issuers in the United States. These accomplishments underscored the company's dedication to innovation and excellence. What truly set Dean Witter Discover apart was its unique blend of traditional values and cutting-edge innovation. The company's steadfast commitment to integrity, transparency, and client satisfaction made it a trusted partner for individuals and institutions alike. Its forward-thinking approach and pioneering spirit continually pushed the boundaries of what was possible in the industry, cementing its reputation as a leader in financial services. Parallel to Dean Witter Discover's journey, Morgan Stanley, a titan in the world of finance, has a storied history dating back to its founding in 1935. Born from the Glass-Steagall Act's separation of commercial and investment banking, Morgan Stanley was established by J.P. Morgan and Company's partners to provide a new, specialized investment banking firm. Since its inception, Morgan Stanley has consistently been at the forefront of financial innovation and excellence. From its early days, Morgan Stanley played a crucial role in shaping the modern financial landscape. The firm was instrumental in launching the $100 million bond offering for IBM in 1952, one of the largest in history at the time. Its expertise in mergers and acquisitions, underwriting, and financial advisory services set it apart from competitors, earning it a reputation for unparalleled financial acumen and client trust. The decision for Morgan Stanley to merge with Dean Witter Discover was not made lightly, but rather as a strategic move to capitalize on the evolving market conditions and position the company for long-term success. As the financial industry underwent significant changes and challenges, Morgan Stanley saw an opportunity to strengthen its position by joining forces with Dean Witter Discover. The market conditions leading up to the merger were characterized by increasing competition, changing regulatory landscapes, and shifting client demands. By merging with Dean Witter Discover, Morgan Stanley aimed to diversify its offerings, expand its client base, and enhance its capabilities to navigate the complex financial environment effectively. As the news of the $10 billion merger between Morgan Stanley and Dean Witter Discover broke, it sent shockwaves through the financial industry, reshaping the landscape and setting a new standard for strategic partnerships. Finalized in 1997, the merger involved a complex exchange of stock and cash that valued Dean Witter Discover at a significant 40% premium over its market price. This deal marked a pivotal moment in the history of both companies, with the combined entity holding assets worth approximately $570 billion and generating an estimated $12 billion in annual revenue. The merger signaled a new era of collaboration and growth, with Morgan Stanley's market share increasing by 15% in the first year alone. Industry and stakeholders alike were abuzz with reactions to the merger announcement. While some viewed the merger as a bold and strategic move that would position the combined entity as a powerhouse in the financial sector, others expressed concerns about potential challenges and integration issues. Overall, the consensus was that the merger had the potential to create significant value for shareholders and clients of both Morgan Stanley and Dean Witter Discover. Following the merger between Morgan Stanley and Dean Witter Discover, the combined entity wasted no time in putting their new resources into action to drive success and growth. The integration process, while challenging, was meticulously planned and executed to ensure a seamless transition and maximize the benefits of the merger. Key strategies were implemented to leverage the synergies between Morgan Stanley and Dean Witter Discover. This included streamlining operations, combining resources and expertise, and cross-selling products and services to clients. By aligning their strengths and capabilities, the companies were able to create a more robust and diversified platform to serve their clients' evolving needs. The financial performance and growth achieved as a result of the merger were nothing short of impressive. The newly emerged companies saw a significant increase in revenue, with the combined holding assets worth approximately $570 billion and generating an estimated $12 billion in annual revenue. The merger signaled a new era of collaboration and growth, with Morgan Stanley's market share increasing by 15% in the first year alone. This ultimately propelled Morgan Stanley and Dean Witter Discover to new heights, with a market capitalization reaching around $16 billion, solidifying their positions as industry leaders and setting the stage for continued success in a competitive industry. The merger between Morgan Stanley and Dean Witter Discover left a lasting impact on the financial industry, reshaping the competitive landscape and setting a new standard for strategic partnerships. The combined entity's success served as a benchmark for future mergers and acquisitions, demonstrating the value of collaboration in achieving sustainable growth and success. The influence of the merger extended beyond the immediate financial landscape, inspiring future mergers and acquisitions in the industry. Companies began to recognize the benefits of strategic collaborations and the potential for creating value through synergies, leading to a wave of consolidation and partnership agreements aimed at driving growth and innovation. Notable examples include the merger of J.P. Morgan Chase and Bank One in 2004, the acquisition of Merrill Lynch by Bank of America in 2008, and the union of Wells Fargo and Wachovia in 2008. These landmark deals underscored the transformative impact of strategic mergers, setting new benchmarks for industry-wide integration and efficiency. As we reflect on the impact of the merger, it is clear that the combined entity's expanded market presence, enhanced capabilities, and improved financial performance were a direct result of their strategic vision and effective integration. The success story of Morgan Stanley and Dean Witter Discover serves as a valuable lesson for industry players, highlighting the importance of innovation, collaboration, and a focus on long-term value creation. Thanks for watching our deep dive into the $10 billion merger that changed Wall Street forever. If you enjoyed exploring this billion-dollar tale, please like, share, comment, and subscribe to our channel. We thrive on your engagement, so let us know your thoughts and what stories you'd like to see next in the comments section. Your support helps us bring you more insightful content about the pivotal moments that define our world. If you want another billion-dollar tale on the hedge fund model that took big pharma, please click here. Stay tuned for more insights and stories that shape our world. See you in the next video.